So good morning. This is another edition of our weekly real estate backstory. Every Monday morning at 9 a.m., we talk about what's going on, the comings, the goings, the whole 9 yards on the real estate
underbellies.
World. Yes.
That's what you like to call
it.
Well,
I do. This is I expose the soft underbelly of the real estate world is what
Very
I try
good.
to do. My name is Alan Richard. I'm the managing broker at Maximum One Realty and Realtor Partners.
My name is Bing Richardson. I'm the compliance broker for Maximum One Realty and Realtor Partners.
And we're really glad to have you today. We also are blessed to have David King from Arrow with us as well. Good morning, David.
Morning, guys.
We sure appreciate you joining us today. So, it is springtime in Georgia, pretty much. I mean, we all loved the whole spring ahead thing this past weekend because that wasn't terrible. But this time of year, things start warming up. We start having issues with our houses. And so this is probably the easiest segue into you right here, brother, is how are bugs in Georgia right now?
Well, not only that, pests.
Well, all of them. Anything that we want to keep out of our house.
Absolutely.
Give us the DL here. Tell us what's really happening.
Well, anything under 4 legs is extra money, right? It's required for those pests, but
I know my kids are. So
exactly. No, it's much like the real estate industry. As it warms up, bugs get moving, and that's what's going on in the world right now. Beautiful days, trees blooming, everything gets moving. But yeah, we're excited. I think we all are to hopefully get out and see some people and enjoy the weather. And comes with that is protecting your home naturally. So for those of y'all that aren't familiar with Arrow Exterminating, we are the second largest family-owned pest control company in the world. 2,500 associates. Recently named a top 5 workplace in the United States. For our size. So we're very proud of that acknowledgement. But most importantly, we're here to help you guys protect homes. And primarily, we'll talk about the real estate side really quick. We offer free termite inspections to any homeowner that would like them. Do what?
I was like, ding, ding, ding.
Oh, like you're ringing in?
Because that's really what everyone cares about. Let's just be honest, right?
Oh, 100%. What are you going to do to help me make money? I got you. No, I'm with you. Let's do a quick little translation, though. If you need for the real estate transaction a termite letter, or as we call it in our industry, the wood destroying organism report, that actually covers 5 wood destroying organisms, which aren't just termites. There are 4 other ones that are necessary. And with that comes a 90-day warranty. So as an example, if I look at Alan and Ming's house tomorrow and they're selling it, and sometime in that next 90 days, they get an occurrence of one of those 5 organisms, we as the pest control company must come out and treat that for free, as mandated by the Georgia Department of Agriculture, which, they are the ones that oversee us. Everybody out here, we pay our tax dollars to make sure that pest control companies are doing what they're supposed to and following the rules. Absolutely. So naturally, that does come with a small charge. There's $50, but you're paying for the warranty, the report that is a state mandated report. So if you get it from company XYZ Pest Control, it is the same as ABC Pest Control. We don't vary in that. The inspection piece of it, if you just want an inspection for your client and it's not part of the steps of the contract, then we can simply just look at that for you and we don't charge anything. So those are kind of the way to separate the two, so you know when you're asking for it. And of course, my advice will be and always has been, find a good relationship in this industry, much like a mortgage lender, a mechanic, or a doctor, or anything else we all are going to use. Find somebody you feel like you can value and trust and ask them those questions. But yeah, our service offerings, for just so everybody understands out there, naturally, we're huge in the real estate community. So those termite reports are huge. Mm-hmm. Any kind of pest control you can imagine, roaches, ants, mice, you name it. Wildlife, we're also the company's going to come get the possum out of your attic or your garage. We do handyman work. Yeah, bats. Amen. We do handyman work, insulation, gutters, and gutter guards. So a lot going on. Yeah. So just appreciate the continued relationship with Alan and Ming, they've been supporters over the years, and we love giving back too. So anybody out there, we support the whole entire real estate community. So if anybody needs anything, I'll put my contact information in the chat, and you're welcome to reach out to me at any point, and love to be able to support you as well.
Well, go ahead, say let them know how they can reach you real quick.
Sure. So you can reach me a couple different ways. So arrowexterminators.com. You can reach just the website if you want to learn more about us. Me personally, my phone number is 470-551-5024, 470-551-5024, or D King, King, at arrowexterminators.com.
Easy for you to say.
I'm telling you, it's a mouthful.
Yeah, we'll have this in the chat, and then we'll also keep this, put this in the comments on our YouTube channel, the whole 9 yards.
Right.
So, David, we sure appreciate you this morning. Thanks for talking.
Thank you for the time. Y'all have a great week, guys.
All right, you too now.
David.
Thank you.
All right, take care.
All right, let's kind of jump ahead here. And so, this week on continuing education we have coming up. So Tuesday, we have 2 classes, both at 10. We have lead generation in today's market, as well as introduction to transaction desk. And so Georgia MLS is teaching that for us. Wednesday, our lovely Ming is going to be teaching Code of Ethics, which is a fun-filled class.
Well, you got to have it. So every 3 years. So,
every 3 years. Yep, that's it.
So if you haven't had yours and you need to get your license renewed, make sure you take your Code of Ethics.
And we've had some new changes, so that's going to be a fun class. All right. Also on Wednesday, we have new construction contract exhibits and walkthroughs. Oh my. It's kind of like lions and tigers and bears. Oh my. But that's a really, we're seeing so much new construction right now that's a really phenomenal class by Amy Davis. So
right.
In addition, we have MLS Tax Suite that's coming this week.
On Thursday.
Yep.
And how to prospect. And you guys know right now, listing is king, bottom line. So it's a good time for you to take advantage of what MLS has to offer.
Yep. Now, I am not a political person. I'm not going to get into the politics of everything, but in being a real estate professional, you need to understand what's going on with the stimulus bill kind of thing. And so, I just wanted to very quickly, because, most of the time the news, everyone has a particular spin on it. I have no spin at all, but I do want you to understand what it is and how it impacts housing kind of thing. So first thing is it has a $1,400 per taxpayer for anybody making under $75,000. It has additional, they're putting like $7.5 billion in the PPP program kind of thing, which is for small businesses. They got another $27 billion for emergency rental aid. Now, the good part about rental aid is that this is kind of twofold, because the rental aid goes directly to the landlords, not to the tenants. So, and so that can really help a lot of our folks who are struggling with their rent. But the bottom line is it also helps our landlords, because so many, the majority of rentals are small independent landlords out there who are having to kind of foot that bill kind of thing. Yep. They're extending the unemployment benefits, an additional $300 a week. There's also additional homeowner assistance efforts. They get $10 billion for homeowner assistance, including, mortgage relief assistance out there.
And what that is actually a down payment assistance from the U.S. government. Instead of going through Georgia Dream or Chinoa loans or what have you, this is actually coming directly from the U.S. government. Now, as far as detail goes, please contact your favorite lender and ask them about it, because I believe it's up to $15,000 down payment.
Yeah. But then the biggest piece is what's going to be going into local and state governments and that kind of stuff for pandemic relief, for the hospitals, for the police, the fire, the whole 9 yards. So, that's another really big piece. But that's the part that really affects housing. We need to understand that kind of thing. And again, not about being political, but more about keeping our information
and also
straight.
Keep you guys informed what's going on out there too. So, and what's available to our clients and also to you.
Now, mortgage rates are moving on up, and that's not really a good thing, but they continue a really slow climb over 3%. So this year we had another high of the year kind of thing. It was 3.05%. It was up from 3.02 the week before. So not a huge increase, actually a very moderate increase. But the good news is that 15-year fixed is a 2.34. and a 5-year adjustable is a 2.77. No one done 5-year, but just being straight up. Now, what does that really mean? So yes, we're at 3.05. The problem is, and what we have to make sure that we are sharing with folks is that people will show the graph on the right, which, when you see that, mortgage rates dropped and now we're seeing a big uptick. Like if you draw that graph out over the last 5 years, even the last 3 years, it's going to look like it's going down. This is just a little tick. Now we are going to, we really do feel that mortgage rates are going to be somewhere in the mid threes throughout most of the year. We're not looking at it dropping back down to 3. But we gotta understand what kind of an impact that 3% really is. Now, here's the challenge: is that it draws a lot of attention when people talk about the interest rate jumping up, kind of thing. So one thing that happened last week was the Treasury yields dipped, which is good because mortgages follow the 10-year Treasury. They had a large payoff kind of thing this past week, or a large sale of Treasury auctions, of 10-year Treasury auctions, and those performed very well. And so that kind of relieved a little bit of pressure. But overall, last week's purchase applications were 2% higher than a year ago. Now, this is not good news. And at first you think, gosh, 2% over last year, that wasn't bad. Well, guess what today marks, or this week marks? Like this is when like we've just come full circle back into coronavirus. And so last year at this time, we were all running around with our heads on fire. So 2% higher than last year is not really saying much. Yes, the market was good last year, but we're going up against time, when we really, especially here in Georgia, a lot of things shut down. So, we got to be ready, because anytime seeing the mortgage rates go over 3%, are they gonna scare off home buyers? And it really does have the potential to do that. And so we need to be able to talk intelligently about what that means. We need to be advising our clients to try and lock in. Just to kind of illustrate the point, if you take the median price listing of $308,000 with a 10% down payment, that means if it jumped up from 3% to 4%, that increases the monthly mortgage payment by $117. So overall, on average, every point, and again, please don't hold me to this, but you're talking about $100 a month for every percentage increase. Overall, just as an average number, just to kind of give you something to play off of.
And sometimes that varies, not just the mortgage, you have your insurance as well and your property taxes. So those two items action can come in play with DTI for a buyer.
Yep. Now, one thing that a lot of industry people are kind of anticipating and hoping is that this actually helps slow the pace of home price appreciation a little bit. And that's one thing. I think that we have another 2 months of showing crazy increases over prior year, because for the next, we're going up against when coronavirus was right, when everything was shut down.
And we took a dip in early April, mid-April. And then it starts to surge back up in May, because that is typically our buying season for the summer.
Yeah. And so that's when we start seeing that kind of information. So, also down payments and mortgage loan amounts reached new highs. And this is actually a really good thing. One thing that we found out of doing this is that people have been saving more during coronavirus.
Yeah, well, if you think about it, they're not going out for entertainment. And people are learning how to cook at home, and they're doing things around the house.
Yep.
So
the median down payment was 7.7%, which doesn't sound like that much, but just a year ago it was 5.2%, and so that represents almost a 20% increase in down payment over the past year. So people are saving more. We do have higher loan amounts for sure, but the market is really, really strong, and so that's one of the things that's really going for us on there. One thing that I was concerned a little bit is that, one of the biggest changes that we've had from the crash in 2008 to now is that cash out refinances have been really, really low comparatively, because back in 2008, prior to the '08 crash, cash out refis were everywhere. Everyone was taking a lot of equity out of their house.
We did.
Yeah, we did. And that ended up catching a lot of people during the '08. But now, and so we have had a little bit of a surge in cash out refis, but let's face it, with the interest rates going up, cash out refis are really going to be dropping down. But here's the difference in cash out refis is that cash out refis now are where people, because the housing market is where it is, one of our biggest challenges for our sellers is where you're going to go. So what we're seeing is that folks are taking their cash out refis and renovating their house. There's been a huge shift in the last, especially 6 months, to bigger renovations more than honestly in the last 10 years. More and more homeowners are doing heavy renovations right now, and they're funding that through cash out refis.
Well,
so they're putting it back into their house.
They're creating a bigger living outdoor space along with pool, hot tub, whatever it is, because now we're being restricted in traveling and entertainment. So we're finding alternative way of entertaining ourselves.
FHA has extended alternative appraisal employment verifications for another month or so, kind of thing. So at the end of the month, FHA was set to expire their standards for appraisals and employment verification. So they have extended it through the end of April, and they'll probably extend it a little bit further again. But what we're really expecting, and what they did is they changed how the appraisal, not the standards, but they could do drive-by appraisals and that kind of stuff. And also we've been able to verify employment from different sources. Prior to the pandemic, verifying employment was a really big deal, and it had a lot of these boxes you had to check and that kind of stuff. And now you can just get a letter from from your employer, and it's recent tax stuff, that kind of stuff. So, as far as like extending the use of power of attorney to assist with loan closings, the sentiment is kind of like that FHA is probably going to stop doing that part, kind of thing. So, Fannie Mae also released their new home purchase sentiment index, and so they do this every month and kind of thing. And so so this month's, first of all, good, is it a good time to buy? And so that decreased from 52 to 48%. And the percentage of people who say it's a bad time to buy increased from 37 to 43%. So basically a 10% decrease in is it a good time
to buy or
buy
sell.
a home.
Yeah.
Now to sell, the crazy thing here is that dropped 4 percentage points, kind of thing. But why our sellers are saying it's a bad time to sell is not that because it's really a bad time to sell. It's because
the inventory is so low.
They're going to be homeless, kind of thing is the challenge for being a seller right there.
Correct.
Overall home price expectations, overall, everyone for the most part is really expecting continued home price expectations. But I do think, once we get over the next 2 months coming up, we'll probably see much more modest gains. It's, it's still going to attract a lot of headlines for the next 2 months, 14% over prior year, that kind of thing. But that's because of where we were last year.
But just be cautious on that. We are experiencing appraisal issues right now. So don't be surprised if the appraisal come back low. Educate your seller and let them know, I understand what you want and understand we have offers for it, unless it's a guaranteed purchase. Where I've seen contracts written right now where they're guaranteeing the appraisal value. And the buy, this is part of the buyer now has more equity and more money saved up because they just sold their home. So they know they're getting more money up front. So they will guarantee the appraisal value based on a comp the agent has pulled up in the neighborhood, what has been sold in the recent last few months. And based on that, they say, well, we'll guarantee 10 or 15,000. I sing as high as 30,000 above appraised value. So have that conversation with both your seller, if you represent the seller, or your buyer, just so if this is something they really want, understand they may have to come up with a price or lose their earnest money. So those are the two.
All right. So
with that being said, job concerns. The The percentage of people that are concerned about their
has
job,
dropped a lot.
yes,
82% are not worried about employment. And so that's a really good sign, because that also jumps into our jobless claims hit the lowest level since the pandemic started, actually, kind of thing. And so it's been dropping for 2 weeks. The jobless claims dropped down to 712,000 last week, which is really, really good news for all of us. So we love that kind of thing. So I want to share a graph with you, kind of thing, and that this is the average equity that our sellers are having over the past year. So this is year over year equity gains by state. And so you can see some states are doing really good, you know, $22,000 in Alaska, 39,000 in Hawaii, but here in Georgia, 18,000, 19,000 in Florida, 18,000 in South Carolina, 16,000 and other ones, kind of thing. So anyway, so I just wanted to share with you the kind of average equity gains that our sellers are seeing. This is really great for us to have, and information that we can share out with our clients.
Well, I kind of let you know where some of the demands, where potentially some of the job increase is based on the property value.
Yeah. So new report came out that almost 1 out of 5 Americans have received at least one dose of the vaccine, kind of thing. Here, and I'm not, again, we aren't getting in the vaccine debate. I'm not getting like, you should go get vaccinated or you should not get vaccinated. That's not what this is. This is just a simple statement of fact, is that, and in Georgia, just this week, they have announced that that now anyone 55 and older, so they dropped the age down to 55, or anyone with pre-existing medical conditions. So like if you've had cancer, if you got the diabetes, any of those kind of things, you are now qualified to sign up to be vaccinated as well. And so the vaccines are becoming more and more available, and more Americans are taking advantage of that. And that is actually opening a lot of our economies up. People who still weren't comfortable going out, even though a lot of things have been open, especially here in Georgia. In other places of the country, it wasn't nearly as so. And even here in Georgia, where it has been open, a lot of people have just not felt that comfortable with that kind of thing. So also we had our February housing market trend report. And so right now, overall in the nation, we're missing 200,000 new listings. Now here in Georgia, our new listings are down by 24% versus last year. And that is staggering because we need some listings right now. Our active listing count is down 58% in the Atlanta market. We're almost 60% down year over year. So, our new listings are down, but overall, our total listings are way down. Our median listing price right now is 16% up, and our median days on market is down 19 versus last year. We are sitting overall at 37 days on the market. Just, to throw this out, a flat market is 6 months. So that's 180 days is normal marketing time. When the number of buyers and sellers match out. 37 days, it's a strong seller's market right now, kind of thing.
Absolutely.
Also, the North American home builders released what percentage of Americans can afford the different price points. And I found this to be actually really, really interesting and wanted to share it with you. So only, for houses over 1.5 million, only 3% of Americans can qualify. So if you're selling, and so over $1 million, another 3 points. So if you are selling $1 million home, only 6% of the population can afford that. And so it goes all the way through, and you can see the different, and if you want, you can, we'll be glad to share these slides out, that kind of stuff. You can also go to North American Home Builders to share this out on social media, that kind of thing. But you can see that, for like $0 to $100,000, only 21%, there's 21% of people that can't afford even that right there. So you can see the overall up to 100 to 175,000, roughly, 89 or 79% of Americans can afford all those homes up above that rate. But it's just interesting to be able to share and to know that kind of information.
What your buyer pools are, percentage wise.
Yeah, and you can see, it continues to increase as the price goes down. So what is the most popular markets for our Gen X home buyers? Whoop, whoop. We are number 3. Okay, so overall, for the 50 largest metros in the U.S., Atlanta ranks number 3. So overall, this is for Gen X, and Gen X buyers are great buyers. We love them because they're still kind of moving up. They haven't really moved into the downsize state, kind of thing. So overall in Atlanta here, the average loan is around $250,000. The average down payment's around $36,000, and the average credit score is actually on a 647. So it's very, very doable kind of thing.
All right.
One thing that we are concerned with, and maybe concerned's the wrong thing. Well,
not concerned.
Yeah. Well, let's, the African American home ownership rate in the U.S. has been dropping for the last 20 years. And this is, here in Atlanta, this is a big deal for us because we have a lot of African American households, and to see that the home ownership rate drops and we're in real estate is a terrible thing. So we have a lot of our friends that really need to understand the power of home ownership. Wealth in the United States is largely derived by home ownership.
Absolutely.
Kind of thing. And so one of the good things that just recently came out, and so they broke out home equity by race in the last year kind of thing. Actually in the last couple of years. And so the good news is that minority households actually fared overall
better,
pretty good. Overall, the average in the Black neighborhoods, the median home equity in 2019 was $30,000. In 2021, $89,000.
Same thing with Hispanic neighborhoods as well.
Yeah.
I mean, both have surged tremendously. So that's a great thing.
That's a really great thing. And so, yes, white neighborhood has increased as well, but it's really good to see that there's a lot of history when it comes down to redlining and signaling out of African American neighborhoods and that kind of thing. And so, or Hispanic neighborhoods, yeah. But I mean, the whole minority areas that were redlined.
But as you can see, what they invest in is now basically reaping the reward. And this is what we're talking about when we talk about legacy. When home ownership is a person's legacy, what they pass down to their children. Yeah. So, but we're really pleased to see these numbers coming up. So that just means overall value of their neighborhoods is coming up and making Atlanta a much better, desirable place to live.
But we also need to be doing more to educate. We need to make sure that everyone understands that right now the white homeownership rate is around 75%, and the Black homeownership rate has never passed over 50%. And so that's one thing that we really want to, we're in real estate. We need to communicate that home ownership, that's how you build wealth.
That's right.
And we want that everyone is on the same playing field. So, all right. So last week was National Women's Day, kind of thing.
Yes.
And so we have a bit of good news that came out of that kind of thing. Single women, hey ladies, outpace men in home purchases kind of thing. And so that's a really good place for us to be. We're happy to see that, but not that I'm hoping that men don't buy houses. I don't mean it that way kind of thing.
There's just very good. There's more ladies out there that are professional and they're at a position where they can purchase a home comfortably and budget for their future and what have you. So,
but that also means that as a realtor, targeting single ladies is I don't mean target. That sounds really creepy when you put it that way. Don't stalk. That's not what I mean. But they do become a very good.
They're just a
buying segment.
Well, what he's trying to say that the rise of single women are on the rise and purchase homes. So don't discount anybody that may, That's all he's saying.
But don't be a creepy stalker. That's not what I meant at all. So, all right. Appliances are a big deal and they're harder to get. Right now they are, and it's on every price point. If you're buying a $800 range or an $8,000 range, you may have some real problems. And so our builders are having a big deal with that because for most of our loan products, you have to have a stove, and we're seeing 3-month delays, 4-month delays, 2.5-month delays on appliances. And so really we share this just because we want to make sure that you are being proactive and sharing that information with your clients. We had a recent sale where the seller was to provide a new range, and it was all agreed to, the whole 9 yards. And when it came down to it, it was 2 months to get it, and the price had increased by almost $1,000 from the time that they ordered it till the time they actually got it. And so so we've got to be ready. If you need appliances, do not dawdle, do not wait around. It needs to keep moving, kind of thing. Also, there was a new study this past week talking about phone calls and how important phone calls still are, kind of thing. Now, one of the biggest things that came out of the study is that people are busy, but people will answer their phone and respect your phone calls. They'll appreciate a phone call. Keep it short, folks. Just the facts, ma'am. They don't want to dawdle on the phone. Now, the study didn't poo-poo text messages, and it said video calls are okay. But the crazy thing, which I find very true, is that even though video calls, everyone thinks that's really going to help convey this message and kind of an emotional attachment. Sorry.
Hard time today.
So even though there's that, the other big kicker is that people got more of emotional attachment out of a phone call than they did out of a video call. And you might think that sounds crazy, but be real serious and think about it. If you smile when you're on the phone, other people can hear it. It's like black magic. Yeah. I don't know what it is, but seriously, like if you pick up the phone and you smile while you talk, you can hear that. And so we can convey a lot with a phone call. And so please do, I know it's the technology time, everything's the whole 9 yards. Pick up the phone. Our clients still really, really appreciate that. And it's a great thing for us, kind of thing. So I want to talk real quick or just share something. HomeSmart has bought Palmer House. Not that that matters to a whole lot of folks here. I mean, unless you're a Palmer House agent, I don't know how that impacts them either. But just FYI, Palmer House is probably one of the 10 largest brokerages in Georgia, kind of thing, and they just got bought by HomeSmart. So just thought I'd kind of share that with you, kind of thing. We do want to talk real quick about pricing and setting the right price to attract the crowds versus overpricing your property. Right now, what we're seeing is, yes, there is definitely, it is a seller's market, but we, and even in the past week or two, we've seen extremes out there on price setting, on helping our clients to set a price, because we've seen homes that are coming out of the market and they're ridiculously overpriced for what's going on in that market. And what that really is doing is that's hurting that agent. And that's hurting that seller. At the same time, like Ming talked about earlier, we had some,
we have one agent put a house on the market, has 65 offers.
Yeah.
It was priced just right. And because inventory is short and it was at a price range where it's high demand. So she has 65 offers. This allows your seller to negotiate. And I know from a buyer perspective, it's extremely frustrating. But at the same time, when you make that offer, knowing what your boundaries are, just make sure you educate your client on both sides, depending on who you represent.
Yeah. Because see, there's this thing called a herding theory, kind of thing. And it's how customers follow the market. And we're seeing that in the housing market right now. Even in our neighborhood, we have our neighborhood has a Facebook page, the whole 9 yards. Anytime a house goes on the market, if it gets a lot, our neighbors were all talking about the house that went on the market and the steady flow of cars going through and what, that house must be a really good deal, That kind of thing really does go through. At the same time, also in our neighborhood was a house that was probably $25,000 over asking. Guess how many folks went there? None. And so the thing is that honestly, in looking at it, the house that was priced properly is going to end up selling for more than the house that went in over asking, kind of thing. So make sure that when you're listing properties, you want to do a really thorough CMA, show what all the activity is going on. And I can tell you right now in this market, it's not about trying to drive the price up. The market is going to be your ceiling on here. What's really going to affect you is the market and the appraisal. And so those really are our controlling factors right there. Right. And if the house is in the right shape, the market is going to respond properly, kind of thing. But we need to be sharing that with our sellers and talking about what is our marketing tactics and how we're really going to market. And because the problem with overpricing a house is after about 2 weeks, people are like, well, what's wrong with that house? Something must be wrong. It's not getting enough traction. All right. We have, data shows that the top paying buyer is typically found within the first 2 weeks of a listing, right, kind of thing. And so if you go overpriced, is there a good chance if you find that buyer in the first 2 weeks? No, it isn't. Mm-hmm. So, but that being said, we wanted to touch and kind of, end today with, how does this whole offering multiple offers on properties at once? So I'm going to kind of throw this at you there, our compliance broker kind of thing. And so first of all, can we put multiple offers on properties at one time?
Ethically?
So here's where we get into that touch, because
and this is where a listing agent gets frustrated, because when you have a buyer's agent throwing out multiple offers on multiple properties, and they're basically throwing out to their top 3, okay? And so if the number 3 came back, of course they're accepted, and number 1 come back, guess what? Number 3 is kicked to the curb and within due diligence period. It is a tactic and it is practiced. As far as ethically, the contract, the way it states is that buyer has a right to terminate within due diligence. So listing agent, when you look at that due diligence period, make sure you shorten it to avoid any pitfalls. Yep. And also listing agent, I will go ahead and do a backup offer. Because because a lot of time buyer gets into this race, and then when they may offer to the top 3, third one came through, and then when number 1 comes through,
they'll drop number 3 like a hot
potato. Right. Not only that, even if it's their number 1 choice, sometimes I've seen have buyer's remorse. Basically, they outstretch their budget in the whole entire contract, and there's really no room for wiggle, and they know the seller is not going to do any repairs. So that becomes a huge issue throughout the entire loan process. So unless it's something that the buyer truly, truly, truly wants, make an offer to where if they don't get it, don't regret it.
Right. And, it's one of those things where we're seeing more and more blind offers right now.
Oh, yeah.
And we're seeing blind offers on multiple properties. And I'm not encouraging that. That's not it. One thing that we do is, on our listings, if you make an offer on our property, we're going to make sure you've actually looked at it. And if you haven't looked at it, we'll, not that all offers get presented, I'm not saying that, but that information will also be that will be presented along with your offer, is the fact that this house hasn't been shown by this agent as well either. And so it's probably a blind offer, and they're not really committed at this point.
And for teams, we will ask, the team leader, whoever submitted the offer, when did your agent access the property? Yeah. So just to make sure that this is not a blind offer.
Now, contractually, you can do it. One thing that if you are going to do it, and again, I'm not encouraging it.
And I have agents, honestly, has buyer that can't come until this weekend.
Yep.
And so they will do a virtual tour with their client through Facebook or whatever it is, and walk through the entire house and point out. And if the agent knows their buyer and what exactly they're looking for, is a better communication. And I've done one like that, and the buyer was very pleased. That's because I worked with them 3 months prior to and know exactly what they wanted.
Yeah. So if you are going to do it, make sure you put in time frames. That's probably the only thing you've got in there to really protect you or protect your clients, that kind of thing. So you want to be doing time frames, be very conscious of those, as well as your due diligence periods on there. So again, I'm not encouraging it, but contractually you can do it. But if you're going to do it, make sure you're doing it to try and protect your clients as much as possible, but also understand that this creates an additional issue for the listing agent, because, just like we talked about earlier, in pricing property properly, you're going to get multiple offers on homes. And so, right now we're having to do this buyer seller dance. If you're the listing agent, well, you're kind of leading it right now.
Yeah, and right now, because we're in unique markets, seller's agent, you need to do your due diligence, making sure you talk to the lender, knowing that the buyer is fully qualified, not just someone that's at the end of their DTI, debt to income ratio, and make it difficult for your client.
So thank you guys very much. We really appreciate you joining us today. If we can be of any service, please call, text, smoke signals. We answer it all. So we hope you have a really great week, and
Happy
we'll talk
Monday.
to you soon.
Absolutely.
Bye, y'all.
Take care. Stay well.